What's up, everyone, and welcome back to the Stocks with Mike and Tom show. We have some big things to talk about this week related to Elon Musk and Twitter. Apparently, there is a pilot shortage going on in the U.S. right now. We also have Powell speaking this week. Stocks are bouncing off of major support levels from last week. There have been a ton of stock crashes over the past couple weeks, and Thursday and Friday were pretty good, so we're set for a very important open on Monday. Make sure to stick around to the end of today's video. There's a lot of important things to know before we start this week, but Tom, fill us in.
Yeah, so last week was insane. A lot of stocks really rose up on Friday. Like you said there, Mike, look at Robinhood here, up 24.8%. We had a lot of growth stocks like RUN up 17%. Lucid was up almost 15% and still breaking out in after hours there. So a lot of growth stocks were moving. Even good old DraftKings was up 10.9%. So it was a pretty good end of the week. But overall, that the SPY was also coming up here and ended up moving back above $400, which to me, Mike, that's been a pretty big support / resistance over the past few months. So now that we're moving back above this, I think that that'll be a pretty good sign, but hopefully we get some more momentum coming back in. But we do have some pretty big events this week. So Powell is going to be giving a speech on Tuesday at 2 p.m. Eastern time at the Wall Street Journal Future of Everything Festival. So I don't expect this to really hurt the market too much or help it either way, but he is going to be speaking. And anytime he talks, we know that that is a pretty big event in the markets. And then on the economic calendar, we do have some retail sales and stuff Tuesday morning. So keep that in mind. But the main thing is Powell speaking there Tuesday after close. And I think that could bring some volatility in, but I don't expect anything too crazy.
All right, Tom, fill us in with Elon Musk and Twitter. I know news came out last week about, Elon maybe, he just wanted to dig more into how many of the Twitter accounts are bots. So what's going on with this situation?
Yeah, he's been actually sending out a Twitter storm lately, believe it or not. So I'm actually looking here on his Twitter. And like you said, he's been talking a lot about the spam accounts and stuff like that. And he also started hitting on Twitter's algorithm over the weekend. So he pretty much said that the algorithm is manipulating you in ways that you don't realize. And he says that you can fix this if you just tap the home button, tap the stars on the upper right hand of your screen there, and then select latest tweets. He's kind of giving the instructions on how to fix this on your phone if you guys are interested in that. But either way, the main thing is that he's pretty upset with how Twitter has been ran regarding their algorithms, regarding all the spam accounts that are on there and everything like that. And he's really talking about kind of fixing Twitter and getting those spam accounts away. But the thing is that he also has talked about potentially walking away from the Twitter deal. And he hasn't specifically said that he's going to walk away, but a lot of people have been speculating that that might happen. And we're actually seeing here that if he does this, he'll have to pay a $1 billion fee, which is pretty big. And then, of course, Twitter can sue him because he's been kind of making their stock go insane. So, if he walks away from this deal, it could be pretty bad. And like we can see right here, they could sue him for billions of dollars in damages additional to that $1 billion fee. So it's getting pretty bad, Mike. And he's been hitting Twitter pretty hard lately for their algorithm and all those fake accounts and everything.
Yeah, so I don't think he's going to walk away. It's kind of in the best interest of both Elon Musk and, Twitter as a whole, in my opinion, at this point for the deal to go through. But crazy things happen. Let me know what you guys think in the comments down below. But I really know the percentage of spam accounts were a pretty big point for Elon. And from what I've heard, it doesn't appear that it's a major problem right now.
Yeah, it's not. And, he still said on Friday that he's still committed to the acquisition, even though he said that, the deal's temporarily on hold. So that's good to see that it's still, or that he's still committed there. So hopefully that'll help Twitter potentially move back up this week since he's still committed. But as we can see in after hours on Friday, Mike, or I should say in pre-market, Twitter's stock got destroyed. It ran from $46 all the way down to $33.50 there at the low. It did end up consolidating around 40, but still that was a nasty sell-off. And, Mike, I feel kind of bad for anyone who's been trying to do an arbitrage trade on this because it's just been going in the complete opposite direction for you.
Exactly. And here's the thing, if you really do believe the Twitter deal will go through, the spread difference is giant now, Tom. Right now the stock's at you could say pretty close to like $40 or so. And, if the deal goes through, it'll get bought out at $54.20. Like, that's a pretty nice size difference.
Yeah, it is. So like let's actually get the percentage on this really quick. So like let's say Twitter is opening around $41 tomorrow, up to that 54.20 mark, you're looking at like a nice 31% pop. That's up to like 54.19. So that's a pretty big move, Mike, above 30% there. So that would be a good opportunity if you did think the deal would happen, but a lot of people are speculating that it won't happen. And I remember, Mike, last week, even Hindenburg put out a pretty big report kind of speculating that it might not happen either. So it's pretty crazy, but we'll have to see how it goes. And who knows, maybe the deal will get restructured and he'll have to pay a different price.
Yeah, we'll see. I hope it goes through though. But either way, Tom, believe it or not, I saw an article on CNBC today about a severe pilot shortage in the U.S. So what is going on there?
Yeah, there is. There's a pretty big pilot shortage going on right now, and it's definitely not good. So pretty much it's just happening because there's a slowdown in training, hiring, and there's a wave of early retirements happening. But as we know, sometimes there's underlying problems that sometimes could also cause these shortages. I remember the last time there was a shortage, pilots were walking out because of mandates and stuff like that. So keep in mind there could be other reasons, but these are the reasons that they're at least giving us. But Mike, as we know, just inflation and everything has been going out of control, making the cost of flights and everything higher. And I feel like that could end up happening even more here. But it's just crazy to see what the airlines are doing because obviously there's a shortage in pilots and they're trying to get more. So they're actually reducing their flight hour requirements. They're bringing in some pilots from Australia. And then also they're dropping, like Delta Airlines, for example, is dropping their 4-year degree requirement to be a pilot. So that's pretty big. It sounds like we're not going to have the same quality of pilots that we've been having, but either way, it's definitely a shortage, and we can see that those airlines were kind of booming back up on Friday. So this could maybe dampen the rise here, and who knows, we might see a bit of a dip back down with this bad news.
Yeah, and I know that at least one lawmaker is said to be considering legislation that could raise the federally mandated retirement age for airline pilots from 65 to 67 or even higher. So, it looks like there's a couple fixes in the works, but either way, a severe pilot shortage is not a good thing. And, Tom, the airline stocks over the past couple of years have just taken an absolute beating. Of course, everything that happened with COVID and the pandemic hurt a lot, but, rising fuel costs hurt. And then, of course, a pilot shortage hurts even more.
Yeah, it definitely does. Like, look at some of these airlines, like poor Southwest here. Ever since last summer, like during June, they were at like $63.68. And now we're sitting here at prices of like $42.99. So definitely some big movement over the past couple of years back to the downside. It's kind of like we're approaching those COVID lows again, Mike. Like if we look at the daily chart, the COVID lows on Southwest were down around like $22 to $30. And with the way we've been falling, I mean, man, I wouldn't be too surprised if we maybe tested 40 or something like that again. I could see that in the shorter term, but yeah, these longer term charts for airlines are brutal. And I noticed that even Boeing, like look at their longer term chart, Mike. I know that they're not necessarily a commercial airline, but they do deal a lot with those airlines, and we can see they're dipping down really hard.
Yep, no doubt about that. So, Tom, we're set for a big week. Stocks had an amazing Friday for the most part, but overall, a lot of stocks are still down a lot. What are some of your favorite setups heading into this week?
Yeah, so I think there's some pretty good opportunities right now for some longer term pickups here, especially like with the growth stocks, of course, and they started to kind of come back up. But some of my favorite ones for this week, Mike, are DraftKings. I really like the way this one flew up and consolidated on Friday. It really broke above that nice like $12 resistance. Now there's a big resistance forming like right around $12.70. So I'm really liking the setup here with DraftKings. I think they can have or potentially have a pretty good move this week if this momentum can keep up. And I was also really eyeing up Facebook, Mike. They're really close to $200, which to me is a huge psychological level in people's minds. And if we see a nice breakout up above 200, who knows? We might get some pretty good momentum here. So I'm definitely going to be watching for a nice breakout up above 200 with Facebook. And I will say, Mike, like Facebook seems like it's at a pretty good level for the longer term. And it seems like it's starting to form a pretty decent support down here around like 175 to 185. So I'll definitely take this movement back up. And hopefully more of these growth stocks continue because, like you said, it was a great Friday. Even stocks like AI and Asana were up over 20%, which was just insane to see.
Yeah, there we go. And let's showcase that bot play from last week. If you guys trade options, pay attention to this. So our bot is awesome. On Friday, it called out the $177.50 strike call options for Netflix at $460 each. By the end of the day, it went all the way up to $1,019 each. It popped for 121.5%. The day before that, it struck with Netflix again. That play went from $630 up to $900. It's like a 43% pop, and it had a lot of other great plays throughout the week. If you trade options, check out that first link in the description and the comments down below. Our bot is awesome for options day trades. You won't find it anywhere else. If you don't like it, you can cancel it anytime. We have a coupon running, so you have no excuse not to try it out. The bot is awesome, and you're not going to find it anywhere else. You also get access to option swing trades. You can chat with Tom and myself all day long. You get access to an awesome private community and a ton of other bots. Definitely check it out. Link in the description and the comments down below. I attached a coupon for you guys. But Tom, let's get right into the momentum plays for this week. And with the first one, we have run to the upside.
Yeah, RUN is on fire here. They are really moving up in a big way. Go ahead and make them break out above $21.40.
Alrighty, with the next one, we have Zoom, also to the upside.
Yeah, good old Zoom here. Go ahead and make them break above $97 even. And if they break that, watch for a nice run up towards 100.
Yeah, we're getting really close to that 100 resistance again. There we go. And then with the next one, we have Netflix to the upside.
Yeah, Netflix looks awesome here. Go ahead and make them break above 190.
Alrighty, so we are watching Netflix, Zoom, and Run for potential day trades to the upside tomorrow, only if they pop above the levels Tom listed. But before we close out, Tom, we have to give a giant shout out to our member of the day, James L. Huge shout out to James L in the YouTube comments. Tom and I really appreciate all of the support for us in the YouTube comments. So huge shout out, James L. Thank you for all the support. And guys, don't forget, if you trade options, check out that link down below. The bot is awesome and it's only going to get better over time. Check it out. You can cancel it anytime. And we have a coupon running. Friday's play went from $460 all the way up to $1,019 each. So check it out, link down below. Besides that, guys, if you are new, make sure to subscribe and let's have an amazing week.